there is no plan to privatize NIPOST.
NIPOST is actually a very important part of our financial and digital inclusion strategy. In terms of, and NISO is also a very important part of the e-commerce sector as well.
The federal government has restated it is committed to its revenue generation drive.
We should increase the revenue profile in the non-oil sector by 75 billion.
Welcome to Business Incorporated. I am Bolaji Akinwale. In the next 28 minutes, we'll be bringing you issues in the business and financial circles. And this week, we will be talking about communication technology in Nigeria. We'll get to hear from the minister in charge of that ministry in the course of the program. On our headlines, tax professionals say they want clarification on the luxury items the federal government wants to tax. These and other headlines for you. The federal government has said that it remains committed to the diversification of the nation's economy through revenue generation from the non-oil sector. The Minister of State for Finance, Ambassador Bashir Yuguda, who made the pledge at the meeting in Abuja, said a target of 75 billion naira has been earmarked as revenues to be generated from the non-oil sector, excluding revenues from the Nigeria Customs Service and the Federal Inland Revenue Service. Ambassador Yuguda also stated that the alternative sources of revenue will help shore up the nation's economic base in the face of the dwindling price of oil in the international community.
We've recently been given a directive by Mr. President that we should increase the revenue profile in the non-oil sector by 75 billion, in addition to what we have already earmarked for Federal Inland Revenue Service. So what we have done is to engage the services of McKinsey, which is a consultancy firm, to help us in that direction. And in 2014, we were able to beat that figure and jumped from the 75 billion deadline given by Mr. President to 150 billion. So we are doing everything possible to mitigate against the low revenue stream coming in from the oil sector through the non-oil sector.
Tax administrators in the country are asking the federal government to define its taxes on luxury items for comprehensive purpose. They made the call in Lagos while examining the federal government's narrow revenue flow from luxury tax introduction. According to them, the policy can only contribute 0.38% to the current revenue structure, but recommends that there is a need to generate more through other means of taxation.
This tax will contribute only 0.38% to Federal Revenue Service collection for this year, assuming a revenue target of 6 trillion. 6 trillion, because that is even more than the federal government budget. Another issue of concern is the question as to whether this is indeed a tax or levy, as necessary legal instrument to back it up has not been submitted to the National Assembly for passage. Why must we continue to have only, the VAT rate at 5%? Why don't you have another rate? Even though it's not only one rate, you have a 0 rate, then we have 5%. But there should be a third rate that will cater for luxury items, for those goods that have inelastic, demand, those goods of insatiable consumption.
And finally, on the headlines, the Central Bank of Nigeria and the Nigeria Deposit Insurance Corporation have disagreed over some proposed amendments to the NDIC Act of 2006. At a public hearing organized by the Senate Committee on Banking and Insurance, the CBN pointed out that the proposed amendments to the Act could usurp some of its core mandate and make the NDIC a parallel regulator for banks, while also creating overlapping regulatory responsibilities for the NDIC. But the insurance depositor insists that it is seeking the amendment to ensure safety and soundness in the banking system, The chairman, Senate Committee on Banking, Insurance and Other Financial Institutions, Basi Otu, explained that the repeal and reenactment is targeted at revitalizing and enhancing the operational framework of the nation's financial institutions.
I don't want anybody living here believing that there are wide differences between Central Bank and the NDIC. If we look at it, we will see that the gap is just very tiny. And of course, in a democracy, there must be disagreements. But I tell you, in this academic exercise, we disagree to agree. But what we want to make sure is that the depositor is well protected. Central Bank, nobody is going to pass a bill or an act that will allow another institution to equate with you, because that would mean causing confusion in the industry. We still allow you as a major primary regulator in that industry.
After the launch of the Light in Africa program in several countries on the continent, the International Finance Corporation, in collaboration with the World Bank, have launched an affordable power program that will help complement the ongoing drive to provide stable electricity. Over 70 million Nigerians in the rural areas are expected to be reached with the off-grid renewable energy scheme.
The Light in Africa program, as I mentioned, is a joint IFC and World Bank program, and with the really objective of looking at providing energy access to the people, to the 500 or 600 million people across Africa who do not have access to the grid. And for us, what we do is that we fully appreciate that the commercial sector is an important vehicle in terms of delivering some of these products, which with the benefit of the new technology can offer real viable energy solution to the people not connected to the grid.
But then why the decision to come do this for Nigeria? Why did you choose Nigeria specifically?
Right. I think for us, any market that has significant population that is not connected to the grid is an attractive market. So what we have seen is that if I take an example of Kenya, where the program has been running for the last 4 years, we have managed to increase the penetration of solar products from about 0.5% in 2009 to somewhere between 12 and 15% now. And this is really targeting the off-grid populations who are using other forms of lighting, and primarily kerosene, which is an inferior form of lighting. So what we have seen with the benefit of technology is that so at the moment they're providing lighting and cell phone charging solutions, but increasingly with this new technology, you're able to power your phone, you're able to power your fan, you're able to power your TV. So the range of services that you can provide is increasing. And so for us, Nigeria, with about 78 million people not connected to the grid, represents an attractive market for them to be able to take up these products and have the benefit of better energy access.
Now let me also find out from you, how much is the IFC committing to this project?
So this is a $2.8 million program that will last for about 3 years. And a significant amount of that money will go towards creating a consumer awareness in terms of educating people about this new technology, and also in terms of developing quality standards for these products.
Over 28 million people have been reached with your solution across Africa. How many people are you intending to reach out?
So we have a target of reaching 1 million households or 5 million people in Nigeria. But what we have seen in Kenya is that Kenya today has close to about 1.9 million people using this product. So we think that if the products really take off well, that is a number that I think is a reasonable target, and we should be able to surpass that.
We know that off-grid solutions that you've been offering are based on solar energy. Is there any other alternative energy generation that you're looking at?
So today, the reason why we have focused on solar is that that presents an affordable solution. There are other renewable energies available in the market, but I think the price points have been a couple of notches higher than what the rural market would provide. But what are some of the interesting things that we are seeing now in regards to solar? So we are seeing the emergence of an interesting business model, which is called a pay-as-you-go model, which is relying on mobile phone payment and mobile network operators to be able to supply or to connect people who may not be able to afford these products, but can be able to pay on a daily basis or on a monthly basis. And so the technology is really affording people to be able to connect to solar, but having monthly installments or weekly installments that they can be able to pay for these products over time. So the interesting things now is that what other technologies are being layered on top of solar, and what does that mean for the rest of the population? That's the interesting thing that we are seeing.
How soon will we be seeing these results in Nigeria?
So that pay-as-you-go system, I would say maybe within the next 1 year, you should be able to see, because there are a couple of companies looking at these markets. So I believe in the next 12 months, you should see some of those business models coming into the country.